Let's be real. If Bitcoin doubled from here, most people would be saying, damn, I wish I bought earlier. But right now, while it's sitting here in the dumps, down almost 50% from the all-time high, not doing anything, everyone's just too shit scared to jump in. And I think that's interesting, because historically, over the last 20 years, Bitcoin usually looks the least exciting right before it becomes the most expensive. So, in this video, I'm going to show you 5 absolutely solid, data-backed signs that show Bitcoin might actually be sitting at what I'd consider a generational opportunity. So yeah, if you're serious about building long-term wealth, you'll defo want to hear this. Before we dive in, do your boy a solid and hit the like button. It genuinely helps the channel, so thank you. With that, let's dive right in. Sign 1, the PEG ratio. Yes, for Bitcoin. Now, I know what you're thinking. PEG ratio? That's for stocks. Yeah, you're kind of right. But in a way, you can apply growth relative valuation thinking to Bitcoin too. The PEG ratio basically compares price to growth. For stocks, it's price to earnings divided by growth rate. For Bitcoin, I'll be honest, it's a bit more complicated, but what I look at is network growth instead. So basically things like wallet addresses, hash rate, adoption, and institutional flows. But here's what I noticed. Bitcoin's adoption curve still looks exponential. Hash rates keep hitting long-term uptrends, and institutional involvement is increasing year over year. Yet price isn't exactly reflecting explosive growth right now. So more or less, you've got strong network expansion without parabolic pricing. That mismatch? That's usually where those golden opportunities live. Sign 2, the Fear and Greed Index. This one's psychological, and that's why I love it. The Crypto Fear and Greed Index measures sentiment. So it basically asks, are people scared right now or euphoric? Historically, extreme greed means danger, meaning the market is more likely to respond a lot more to negative catalysts than positive. And on the flip side, extreme fear creates amazing opportunities, since it's when everyone is typically too scared to invest, but the market becomes like super sensitive to positive news, pushing prices up easier. And here's what's funny. When the index is screaming fear, that's usually when buying feels the hardest, because you feel kind of stupid. You feel like maybe this time it's different, even if nothing has fundamentally changed. Every article starts talking about why Bitcoin is trash and heading to absolute zero. Meanwhile, institutions are secretly loading up whilst you panic sell. If you look back historically, buying when sentiment is weak has produced some of the best long-term returns. Have a look at this screenshot of the Fear and Greed Index. What do you notice? You see the correlation? If you bought during the times of extreme fear, it's almost like this was guaranteed to be followed by a relief, where the market calms down and the price recovers, rewarding those brave buyers with a really nice gain. Human psychology is genuinely one of the biggest edges in the financial markets. And right now, sentiment is very cautious, not exactly euphoric. Historically, that's not a top signal. That's a positioning signal. That's how I'm seeing it anyway. Because investing using my emotions has never rewarded me. However, investing using my logic, historical data, and patience, that almost always rewarded me in the long run. Sign 3, the Bitcoin rainbow chart. Okay, this one's fun. The Bitcoin rainbow chart basically overlays long-term logarithmic regression bands over price. And each color band historically represents a different price category. Dark blue basically indicates Bitcoin is basically at a fire sale. Green is the accumulation zone. Yellow is still kind of cheap. And red indicates maximum bubble territory. Now, obviously it's not magic. It's just math over long time horizons. But here's the thing. Every single time Bitcoin has dipped into the lower bands, long-term buyers who accumulated around there were rewarded. And when it hits the red zone, that's when everyone's uncle starts talking about crypto at dinner, which is obviously the time to sell, because it's likely overhyped and overpriced. If we're currently sitting in lower to mid bands, historically, that has not been a bad place to build a position. But look where we are right now. Like, come on. Is this chart not screaming that Bitcoin is super cheap right now? Not financial advice, of course. Just historical pattern recognition. And like I said earlier, I follow patterns and data, not the bipolar headlines. Anyways, on to the next. Sign 4, the MV-RVZ score. Alright, this one's a bit deeper. The MV-RVZ score compares market value versus realized value. So, in simple English, it basically tells us if Bitcoin is overvalued compared to the price the coins last moved at. When the Z-score is extremely high, this typically indicates bubbles. When it's low, undervaluation zones. Historically, long-term bottoms formed when MV-RV was compressed. So I'll put up the chart for Bitcoin right now. Just take a look for yourself. We're absolutely nowhere near historical bubble extremes. In fact, you could argue we're sitting closer to value compression than speculative insanity. I mean, just take a look for yourself. Look how close we are to this green strip, and then have a look at how well the price ran after entering this area. The guys who entered here were rewarded with some juicy ass gains. This time round, I want to be one of them. Because generational opportunities don't appear from easy conditions, they start from boredom. When most people are too scared to jump in. When it all seems dead. Sign 5, the halving cycle structure. Now, this one is structural, and you've likely heard of it before. Every 4 years, Bitcoin's block reward gets cut in half. Supply issuance drops. Historically, the strongest bull runs happened about 12 to 18 months after these events. Now, I'm not saying history necessarily guarantees anything today, but I am saying supply shock plus increasing demand and growing adoption is usually a recipe for a bull run. That combo has historically always been explosive. And right now, we're in that post-halving digestion phase, which, if you zoom out, is usually where the big boys accumulate just before momentum kicks in. So yeah, let's recap real quick. We've got growth outpacing price. Sentiment is currently cautious, not euphoric. Rainbow chart nowhere near bubble territory. In fact, it's in the golden opportunity zone. MV-RV not overheated. In fact, it's actually showing we are heavily oversold and close to the green zone. And we have the post-halving structural setup too. Individually, interesting. But when these all happen together, that's when I really start getting excited. At the end of the day, markets don't reward comfort. They reward conviction when things feel kinda uncertain. And I feel like that's where we are now. Not hype, not mania, not despair. Just opportunity hiding right in plain sight. Now look, could Bitcoin drop tomorrow? Of course, it's Bitcoin. This thing moves like a friggin' roller coaster. But if you're thinking long term, if you're thinking in cycles, not days, you could say this is the kind of pricing environment that gets disciplined investors excited. I genuinely feel like in the next 12 to 24 months, those of us who were brave and patient will be rewarded big time. But what do I know? I'm just some dude playing COD. So yeah, let me know what you think in the comments. Is Bitcoin still too expensive, or do you see an opportunity forming? Also, feel free to join our free Discord community where we discuss stocks, crypto, and ways to leverage these opportunities. Also, subscribe to see more fun, educational content. And as always, stay safe, stay healthy, and I'll see you in the next one.